Welcome back to the InvestTalk Sector Spotlight, where today we'll be not only wearing matching red ties, but talking about the materials sector.
And the materials sector is vital to the global economy because if we want to build anything, you need those raw materials. And the dynamics within each particular raw material you're talking about, whether that's coal, whether that is copper, whether that is zinc, uranium, etc.
Gold, let's mention more. So typically when people talk about the materials sector, what they're talking about is companies that are involved in the discovery and development of these raw materials, something that tends to be very difficult to get into, very costly, not just to find those materials, but to refine those materials. And more than anything, the backbone of economic growth.
Yeah, very capital intensive, which means that if you want to develop new mines, new production, new refining facilities, you're going to have to spend millions, sometimes billions of dollars to make that happen. And so in this environment, or in this environment where there's higher interest rates, what's most important, I don't say maybe not most important, but what is more important than it typically has been is what is the cost of capital to actually go and build those facilities. And so I actually think higher interest rates are going to be inflationary for this environment because they are so capital intensive. And that's what you're already seeing. You're already seeing most material prices go up since the pandemic in a material way. And so in an environment where green energy is kind of a thing, right? Where countries are incentivizing businesses to spend more on developing green energy projects, the raw materials that go into batteries, into electric cars, those are certainly going to be in much higher demand than they have been in the past.
Yeah, let's take a step back because I think that's a really important point, because typically when people think about the path of interest rates over the past 18 months, it has been to raise them in order to choke off some business investment and to deal with inflation, right? But within the materials sector, what we both know is that it is very expensive to, like I mentioned, not only find, but refine these things. So if capital is becoming more expensive, the natural next step is that there is going to be less of a supply. And if there's less of a supply, there's still going to be businesses that are competing for a given level of demand on a finite level of supply, meaning prices have to move up in the short term. Yeah. You and I have had this discussion. I think in the medium term, it probably corrects. But in the short term, this move, more likely than not, would raise prices for consumers as they're passed along from producers.
Well, I think it depends on the other side, which is demand. And we all know that while they're raising interest rates to cut off the demand in certain sectors, they're also creating incentives like the CHIPS Act, like the Inflation Reduction Act, to create more demand within those particular green energy sectors, which, when you talk about building an electric car, it needs something like 7 to 8 times more copper than your traditional internal combustion engine, along with all the other raw materials that go into the batteries and the wiring and everything that goes into building an electric car that's very, very different than an internal combustion engine car. And so the supply chains are more vast. And so, this is an environment where you're likely to continue to see this sector do fairly well, but it's certainly going to depend on which part of the material sector you're talking about. I hear a lot about lithium, and we just found a huge lithium deposit here in the United States.
You and me?
Not us. Not you and me. No.
I was like, let's go.
But somebody did. I forgot who it was exactly, but it looks to be one of the largest lithium mines in the world. And so that is an area where it's probably not the greatest place to invest because of the easy supply that can come on market and the large finds that are really around the world. And so it's crucial to understand both sides of the supply and demand ledger.
Yeah, well, why don't you talk a little bit about the chemical side of it? Because I think a lot of people primarily, when they think of materials, they think of copper, zinc, gold, silver, components that for me, you may see an increase in demand as we move more towards the search for quantum computing, artificial intelligence. That would kind of bolster the demand for those materials. But the materials sector is not just mining.
Yeah. So there are basic chemicals, there are specialty chemicals, and there are agricultural chemicals. And they're all very different in their supply-demand dynamics. So your basic chemicals are typically your inputs to plastics, for example. Very commodity-like. There's not huge margins in that. Petrochemicals in general. Then there are specialty chemicals. You can even see things like flavorings that go into our food. Yeah, flavorings.
Oh, food flavorings.
Food flavorings, exactly. And they're harder to produce. They are more capital intensive. They're less commodified, so they tend to have some sort of relationship with the end product producer, and they produce small batches of these chemicals, and those tend to be more profitable. And then there's obviously the agricultural chemicals. So this is basically fertilizer. So about half of all fertilizer in the world is synthetic, meaning they pump natural gas, or they mainly use natural gas to create this synthetic fertilizer. So there's a big factor in what are natural gas prices, where are they within the world. So here in the US, natural gas is pretty cheap. Overseas, natural gas is pretty expensive, especially in Europe. And so, this is that arbitrage is a way to earn extra profits. And so the energy inputs to a lot of these chemicals is very important, depending on where they're produced.
Now, for me, in terms of the market drivers, right? When you think of any sector, interest rates certainly drive the market. I think more than anything, the materials sector is affected by the cost of capital. It's affected by technology. It's affected in a large way by geopolitical issues, and it's affected by regulation, right?
Yeah, because when countries want to build infrastructure, for example, they need a lot of materials. And so if countries are trying to grow their economy, they're trying to stimulate their economy. China did this in 2008, right? We had this global financial crisis. Economies were depressed all over the world. And what China did was they spent a bunch on bridges and many times roads to nowhere, or apartments that just were never used. We know about the ghost cities, et cetera. And so the trends within government can really impact the end demand for a lot of building material products.
Yeah, and a lot of regulations around mining, around actually refining these things. If you think about the push towards EVs, for example, what does that do for the demand of copper, or demand of lithium? Then on the other side of the coin, it's what is your environmental impact from mining that lithium, from mining that copper? So a lot of what's going on within the industry, in my opinion, is still in a discovery phase, where there's been some push towards environmental regulation that over the next decade or two is probably going to drastically change the industry as a whole.
Yeah, in a world of fiscal dominance, which we've talked about many times in the show, which it's about governments using more of a scalpel to meet their end goal for the economy, as opposed to when it comes to monetary policy, raising interest rates. It's a very blunt tool. And so when governments come in and they have industrial policy to try to create a bigger green energy economy, well, that's certainly, they're not thinking about the end demand, right? They're not thinking about the raw materials that go into producing that. They just want to get to that end goal. And so I think governments are going to play a much larger role in the direction of the basic material sector over the next decade or two. Now, the biggest factor within the material space are commodity prices. What is that trading on the market? And that can be wild. The swings can be wild. And a lot of these companies, almost all of these companies, have some sort of operating leverage, which means if the raw material, the raw commodity goes up 1% in price, their profits many times go up 2 to 3 times, and vice versa. And so the volatility of the sector tends to be very, very high. So if anyone's investing in the sector, make sure you understand that volatility that is likely ahead. And sometimes that can be good volatility in your favor, and sometimes it cannot be. And so if you are not aware of that, you can be shaken out of that during, pullbacks, natural pullbacks that happen within every cycle. And I still think we're in kind of this longer term commodity upcycle, but there will be downdrafts, especially when the dollar gets stronger.
Yeah, I think for me, people too often think about the end profit aspect of commodity pricing, right? If I can sell what I have today for a higher price than what I paid to produce it, I'm making a profit. And as those prices go up on current inventory, I'd be making more and more profits on already previously established inventory. But it's even more than that, right? Because not only are you thinking about the margins you're getting off of what you've already produced, now you're making decisions on whether or not new projects have net present value that is positive. So as commodity prices increase, not only are profits from these companies going up, but they're also more willing to risk capital to produce more. So in this environment where commodity prices are on an upswing, you would expect, generally speaking, the overall supply to increase, which is good given where levels of demand are globally.
Mm-hmm. Yeah, but at the same time, you have kind of this new environment where I think companies are less willing to go out there and produce more of a particular commodity, maybe because they're unsure of where future government policy will go. For example, this is happening in the energy space where a lot of companies are pulling back on development of new projects because, will the government ban gasoline in the next 10 years, for example? And so that can happen in the material space as well. So there are a lot of geopolitical dynamics that are certainly at play here, with countries banning the exports of certain commodities as well, certain materials, because they want to keep that internally so that they can produce whatever goods that they want to, both for the domestic population, but for their export business as well. So, in a more multipolar world, as opposed to everything just being the globalization growing exponentially, we obviously are seeing that retrenched. And so those geopolitical dynamics are at play as well.
Yeah, and certainly in a time where global tensions are rising, there can be an issue related to where these materials actually exist. So one of the benefits, though, towards global equity, if you think about it, is the placement of some of these things primarily in emerging market countries. Gives those countries a foothold on the global stage in a way that they didn't have before. But at the same time, if those countries, if those areas of the world are unstable, then so are the supply chains.
Yeah. So the jurisdiction that these material companies are operating in, for example, if you're operating in Africa and there's a coup in, say, Niger,
yeah.
Right? Then that will be that could potentially be a place where now your mine is shut down. You don't have production. So it's not just about how much are they producing, but how stable is that production over the long term and the jurisdiction in which that production is coming from. Well, that was a good overview of the materials sector. Thank you for watching, and a reminder to like and subscribe to this channel, as well as our podcast, InvestTalk. And we'll catch you next time on the next edition of the InvestTalk Sector Spotlight.